Hi there. Here's another program we made for a client that trades the foreign exchange market. This is basically an algorithm we created, and more importantly, we created a program to be able to test the algorithm and make it more effective, more efficient programmatically. So anyways, I'm just going to give you a brief rundown and then I'll show you how it works. If you read the text before, you can kind of see the synopsis on it. So here it goes. Basically, this is, as you can see, it's pretty big, but basically what it does is it runs through a bunch of calculations here and ultimately gives them a signal, buy or sell, based on the algorithm before that. And then after the buy or sell, it determines if they made money on the trade or lost money on the trade. It's calculating what they call pips. Um, and over here, you can see the gains and losses. What they were interested in doing is over here, I'm going to come over here on this spot close column, column A. What they're interested in determining is if when there's a switching point between a buy and a sell, and when they get close to that switching point, they think their algorithm's not quite as effective, and so they wanted to try and determine that mathematically to see if it proved to be true or not. So as you can see, I'm just going to show the tabs here. They just have a bunch of different things on here to determine their performance and things like that. But the macro runs on this sheet here, and it basically uses these cells up here. And you can set your parameters in these cells to be plus or minus. And what you're doing plus or minus of is however many pips they want to see, how far away from the switching point they are to produce better results. So what I'm going to do right now real quick is kind of hide all these cells, or columns, sorry, so that we don't get the interference, and you can see how it runs. But so you can come up here and I'll go well, we already have 0.0010. We'll leave that as is. We'll leave that as positive 10 and negative 10. Those are pips. And so what I'm going to do is I'm going to go ahead and run the macro, and you'll kind of see, I'm going to have to end the macro in the middle because the thing runs for about 5 minutes on it's quite a bit of data. So I'll just kind of end it in the middle, but you can see it go. And then we'll call it a day on that one. So I'm going to come up here. I didn't make a button or anything for the macro, but if you just come to run it, you can run, and what you're going to see is you'll see the things start switching and changing, and they'll change the signals, and then ultimately over here you'll see the profit and things like that changing. So oops, getting a call here. Let me ignore that one real quick. So here we go. I'm going to go back. I'm going to run my macro. And as you can see, you see things switching, and what it's doing is it's just testing each level by the 10 pips and switching it. So that's kind of how it's working. And it probably runs here because it has to go through every single row and add 10 and then take off 10 and then change the signal and then put it back and then do the same thing on the next row. So you can see it just kind of going. We passed my screen there. So I'm going to hit escape on here and my macro, and that's basically what it does. But by doing that, ultimately they're able to come over here and see the gain and loss after it was run, but it has to run through all this data here, so it's extensive. But ultimately they can come over here and it would change their chart, and they would see a better trajectory or a worse trajectory, and they could come back and change their parameters again. And that's how that works. But this is basically a hedge fund that uses this type of programming to make their trades. So thanks for listening. I'm going to sign out.